Good morning. Welcome back to the Retirement Report. I'm Hank Parrott, your host. With me, my good friend and special guest, Dr. Friday with Dr. Friday's Tax and Financial Services over in Brentwood, Tennessee. She is a tax expert when it comes to individuals and small business owners, and she's got some great tips for you today. But first, we're going to get out there again for the first 10 callers to my office. Hey, would you like to come meet Friday and me together? How's that? Two heads are better than one, they say. We'll find out. One of the things that comes in here is, you know, when it comes to tax planning, tax preparation, we talked about before. Tax preparation is important, having someone to get the right numbers in the right boxes to keep you out of that big box with the bars on the windows, right? It's important that you get your taxes done and get them done right. She can help you, by the way, if you're one of those facing that big box and bars thing. Hopefully not, right? All right, when it comes to taxes, here's one of the things. Tax preparation, that, you know, a few months in the year when we have to really get all hyper focused about getting that handled, or getting at least our extension put in so we have another six months to worry about it. But the other piece is tax planning, and that's a year-round thing. This is a way that, you know, when I meet with clients, when we do reviews, when I meet with new people coming in, first thing we're doing is we're looking at, you know, their investments, making sure that they have, you know, that they're not taking on undue risk and that they're getting a good return on their money, and that we're looking at, you know, within that, are there any time bombs that could be set off, like junk bonds in their portfolio and things like that. And we look at ways in, and we show you how you can improve on your portfolio, how you can minimize your risk at the same time getting those market returns. And we've got 60 years of Nobel Prize winning research showing us how to do this. We don't have to make it up, it's already there. So, but it's amazing how few people actually are aware of this research or utilize it. But we're one of those that do. So, and I've been sharing that with you for many years now. So one of the things, though, that goes in next is, right, we do investment stuff. We look at your financial. How much do you have for income, expenses, assets, liabilities? We look at all that. We factor in inflation. Again, taxes, right? And how much are you going to be needing to take? What's the needed rate of return you'll need to make on your money to make sure you'll never run out of money, right? That you'll be able to maintain your standard of living, your quality of life, no matter how long you live. This is a big part of what this whole planning thing is about. And when it comes to doing that, tax planning is always a factor. It's ways that we can minimize taxes, right? That's an easy one that we can do. How we can improve on the investment side, how we can minimize taxes, and sometimes those go together as well. Tax efficient investing. Have you heard this term before? This is another part. How you invest can either create more tax, or if done smartly, right, we can reduce tax. How the smart money invests is always about looking at the total return, which means minimizing taxes at the same time. All right, so if you'd like to be one of the first 10 callers to my office, 615-376-5325. If you like to come in, if you do have tax questions, if you'd like a second opinion with regard to your taxes as well, you know, I can bring Friday in and she'll meet with you as well. So again, 615-376-5325. First 10 callers to my office. Tessa's standing by to get your information. She will send you out a packet of things to bring to your appointment with me, a little checklist of things, right? We need to look at your investments. We need to look at your tax return. We need to look at, you know, if you have estate planning documents, if you'd like us to take another look at that. This is another area. It's a team approach. We've got an estate planning attorney. We've got someone like Friday that does taxes. We've got myself who does all kinds of things. All right? Investments, so we have a lot of fun. All right, 615-376-5325. And this goes, you know, Social Security. This is one of those things people come in all the time. Should I take Social Security now? Should I put it off?
Big question.
What about Medicare?
Yes.
Oh my God, that's so confusing. I don't know what to do. Do I do original Medicare? Do I do a Medicare Advantage plan? There's so many decisions to be made. Well, we help you with those because I get the facts and figures to show you, for you specifically in your situation, which is going to make the most sense. Can show you, for instance, if you're faced that decision about Social Security, whether to take it at 62 or wait till full retirement age, or maybe even 70, you know, what's going to make the most sense? And for a couple, this can get some interesting strategies that can come into play there as well. So again, first 10 callers, 615-376-5325. We do it all for you. All right, we want to get you a plan. By the way, this isn't just a visit where you come in and we just sip coffee and shoot the breeze for an hour, right? You're going to get the whole thing. It will be coffee. Yes, the coffee is involved. You're going to get a full comprehensive plan. If it's 1, 2, 3 visits, whatever it takes to put that in your hands, something you can really use to change your financial future for the better, okay? And when you come in to see me, yes, free copy of my book, 7 Steps to Financial Freedom in Retirement. And guess what? We deal with all that. The first 2 chapters are all about the financial planning process. 3rd chapter gets into taxes, IRA mastery. 4th chapter, guarantees. How about investing with guarantees? That's kind of a neat thing. We show you how to do that. Fifth chapter is on how the smart money invests. This is that 60 years of Nobel Prize winning research I was talking about, and how we apply it. All right, and in the, where was I at? Sixth chapter has to do with long-term care. This is one of those areas that is, again, increasing concern for people. And then the seventh chapter is on estate planning and understanding the difference between wills and trusts and powers of attorney, why they're important, different type of trusts and how they can be used, what's the difference between a revocable trust and an irrevocable trust, and how they can be used to benefit you with regard to your own estate planning, which is great for
things.
That's it. You get a lot, right?
It's a lot.
It's amazing.
Goodness gracious.
Keep two.
They take notes.
You know, when it comes to tax planning, by the way, we've got the new tax code, which I'm pretty excited about because it does make it even easier now to both minimize taxes, but also with regard to Roth conversions. And as I was saying, you know, when it comes into these statistics, when you're looking at what's going on demographically in our society, America is getting older. Okay, what that means basically, I mentioned to you in about 10 to 12 years. It could be worse. You could not be getting older. You could just be going the other direction somehow. Under. One of the things that comes in, we're getting off the rails.
Exactly.
One of the things that comes into play when it gets into your planning is think about that for a second. All right, if we know that demographic, if we understand how that works, that we've got all these baby boomers who are going to be turning 65, and right after them another huge generation with the Gen Xers. So we got now 130 million, almost half the population.
Crazy.
That it's going to be turning 65, which is interesting. That means a lot of people going on to retirement, Social Security benefits, right? The bill is coming due. What was I sharing with you earlier? 4 years, in 4 short years, Social Security will be paying out, the Social Security Administration will be paying out more in benefits than they're taking in tax money, all right? Payroll taxes. So this is one of those areas that you have to be thinking, well, then what does that mean? Where's the money going to come from, right, to pay those benefits? To pay that Social Security benefit, to pay those Medicare benefits. Where is the money going to come from? Right, income taxes.
It's going to have to be.
Or they're going to raise payroll taxes, maybe
I think it's going to have to be payroll taxes, because the fact is a lot of people walk in our office and they're like, I pay so much in taxes, but when you look at their forms, they're not paying ordinary income tax. They pay Medicare tax and Social Security tax, which is 15.65. You pay half of that, 7.65, or 15.35. 7.65 as an individual is what we pay, and then Social Security will cut off at like 127,000. Medicare never cuts off. But the fact is, ordinary income tax is a whole different thing. And I think, since statistically you just said 10% are basically paying all the ordinary income tax, the only way to get enough to spread across these kind of numbers would have to be an adjustment to the Social Security and Medicare. I mean, because everyone's going to have to pay a little bit more in for them to be able to fund. I mean, it's going to be a fourth of our budget before you know it.
So one of the things we're looking at, so payroll taxes going up, income taxes going up, because we already know that how much can they raise these things, and that's, you know, how much is it going to be required to raise them, and what kind of things can you do to minimize the impact of that. So if you're retired, guess what? No more payroll taxes, which is an interesting dilemma, isn't it? Think of it, this is what I was talking about the fewer people paying in. More people, when they retire, not only are they going to be taking money out in the form of Social Security benefits and Medicare and all that, right? But they're not paying in anymore. There are no payroll taxes if they've just got a pension or Social Security benefits. Those aren't being taxed for payroll tax purposes, just income taxes, and even then only if they make a certain amount. We're going to talk a little bit about Social Security taxation here in a moment. So understand again how that works, and think that through, okay? So if fewer people paying in, they're not paying payroll taxes, and now they're starting to take money out. And we have fewer workers then to pay that. So yes, are they going to have to raise payroll taxes, and how much so? And of course income taxes, and that's where the income tax thing is probably going to go up even more, because now income taxes are going to apply to those that are just that aren't paying payroll taxes. In other words, if they're on Social Security and maybe a pension, they're taking money out of IRAs, that of course is taxable. Right. This is one of those areas, again, you know, putting the thinking hats on a little bit here and thinking this through as far as what it means to future taxes. If you've been putting, most people, pensions have gone away, and starting back in the 80s, they started with the, 401ks became more and more popular, and now that's how most of us save for retirement, is in our retirement accounts. We have either IRAs or 401ks or maybe a thrift savings plan. 403Bs, 457s, SEP IRAs. There's so many of them, right? And of course, Roth that we've been talking about. So we're putting this money in on the traditional sense. If we're doing 401Ks and IRAs and say a thrift savings plan, we're not paying tax. That's great. We're reducing our taxes. But if you're in a 12% bracket, by the way, it's something to think about. If you're thinking about Roth, you know, this is where here's a rule of thumb for you. If I'm trying to decide whether to put money into a 401K or a 401K Roth option, or even a Roth IRA versus a traditional IRA, one of the things to think about, if I'm in a 12% bracket, and we've just been talking about what does the future look like with regard to taxes when I take that money back out. So if I'm only going to save 12% on my taxes to save money, but when I take it out, I was going to be paying 25 or 30% tax on it.
Exactly.
Might it make more sense to pay the tax now by doing a Roth and then let it grow tax-free, so when I take it out later, I don't have to pay any tax on it at all. So this is one of those things we get into in terms of planning and thinking your specific situation and doing these projections and seeing what's going to make the most sense. Understanding, so you could save up, maybe you got $1 million in these IRAs, right? Well, guess what? Depending on what your tax bracket is, if you were going to be paying 30% tax, there goes $300,000 of that million.
Yeah.
Doesn't feel so much anymore, right? I've only got 700,000 actually saved. I thought I had $1 million saved.
Hope you don't live in a state with income tax.
Borrowed money from the IRS to save this money, and now I got to pay them back. And guess what? The most, if let's say, well, I don't need the money, I'll just let it ride. Well, guess what? 70.5, the IRS says, oh no, we're going to do these requirement of distribution because we want to get those taxes that we let you borrow from us. Okay, so this is one of those areas when you're saving, and we're looking at you know, how much money you're going to be pulling from your accounts. We have to take those taxes into consideration and how we can minimize them then when we do it. That's why all these strategies are so important.
Absolutely.
It's a huge difference to you. It can be worth hundreds of thousands of dollars over your lifetime to get these strategies right. Okay, and this is, again, to make it easier for you, besides just listening to our wonderful patter here, whatever this is.
Pitter patter.
Pitter patter. How about you be one of the first 10 callers to my office? 615-376-5325, and we'll do up a tax strategy for you, all right, specific to your situation. So again, first 10 callers to my office, 615-376-5325. Tess is standing by. She'll get your information. She'll take down, basically get a little information from you, send you out a packet of things to bring to your appointment with me, a checklist of things to bring to your appointment with me. And when you come in to see me, a free copy of my book, 7 Steps to Financial Freedom and Retirement. So one of the things we get into, again, it's tax strategies, investment strategies, Social Security, Medicare. We talk about estate planning. We get into whatever areas you have of concern. And the biggest one that I deal with all the time is that of not wanting to run out of money, right? That's the biggest fear that we all have, is that we're going to, you know, find ourselves in our advanced years when we no longer can work, let's say, or, you know, the thought of it's going to be really tough to make any money, and we run out of money. Okay, so we're going to look at that now. I can show you what your financial future is as a part of this retirement income analysis, this comprehensive financial plan. So again, first 10 callers to my office, 615-376-5325. And when you come in to see me again, a free copy of my book, 7 Steps to Financial Freedom and Retirement. Okay, you know, one of the things that, you know, when we're talking about, again, this planning and how this works for you is understanding, you know, seeing what your financial future looks like. So if you're concerned, do I have enough? Can I retire this year or next year? Or, you know, I'm already retired. Do I need to go back to work maybe? You know, those kind of questions that come up, you know, that fear of running out of money. Or am I going to have, you know, one of the things I hate, I'm going through a lifestyle expense worksheet. It's one of the tools that we use to help us determine what your monthly outgo is, what your lifestyle is financially. Right. You know, we measure it that way. And when we look at that, it's so, when I have someone say to me, well, I can get by on this. No, we don't want to get by.
I can survive. You know? On beans and bacon if you just give me this much.
Forget about survive. We want to thrive. We want to, you know, this is abundance. We want to have fun. You know, this isn't about getting by. This is about how, you know, lifestyle. First off, measuring, this is what you like doing. This is what we want to make sure you can continue to do. And then we want to improve upon that. We want to throw in some fun money and do some really cool fun things, all right? Well, we're going to take another break. When we come back, we'll dive back in again. So join us here. We'll be right back on the Retirement Report.